In 16 years working with businesses, I've seen $1 million claims happen. And I've also seen people think they were covered when they weren't. And most of the time, it comes down to not understanding the basics. Because here's the reality, this isn't just technical knowledge. If you misunderstand general liability insurance, you can end up with a claim that's either not covered, partially covered, or capped in a way you didn't expect. And most people don't realize there's a problem until after something goes wrong. In this video, I'll show you what general liability insurance actually covers in plain English, the key policy terms that determine how much protection you really have, and the biggest gaps and exclusions that can catch you off guard if you're not paying attention. So let's start with a situation that plays out all the time. You're running your business, things are going well, and then one day you get a call. Someone slipped and fell, or something you worked on caused damage. And your first thought is, all right, this is why I have insurance. But then the questions start creeping in. Is this actually covered? How much is the insurance company going to pay? And is there anything in my policy that could get this denied? Because what most business owners don't realize is that general liability feels like this broad safety net, but in reality, it's a very specific box with very specific rules. And if you don't understand how that box works, you won't know you have a gap until it's too late. So let's break down what's actually inside that box. All right, so let's start with the foundation, what general liability insurance actually covers. And the easiest way to understand this is to realize that general liability is built for one specific purpose. It protects you when you cause damage to someone else. That's it. So, right away, there are two things it does not cover. It does not cover your employees. That's what workers' compensation is for. And it doesn't cover your own property. That's what a property policy is for. General liability is strictly about third party claims. Now, within that, there are really three main buckets of coverage you need to understand. The first is bodily injury. This is when someone gets hurt, either at your location or because of the work you're doing. So think about a customer walking into your office, slipping on a wet floor, and breaking their hip. That's a classic general liability claim. The second bucket is property damage. This is when you damage someone else's property. So if you're a contractor and you're working in someone's building and something you do causes water damage, fire damage, or anything along those lines, that's where general liability steps in. And then the third bucket, and this is one a lot of people don't think about, is personal and advertising injury. This has to do with things like defamation, misleading advertising, or something you say in the course of promoting your business that causes harm to someone else. So, for example, if you run an advertisement and it offends someone or damages another company's reputation, that can fall under this part of the policy. So, those are the core pieces. That's what's inside the box. But just knowing what's covered isn't enough because the next question is, how much is the insurance company actually going to pay when something goes wrong? Now, this is where a lot of people get tripped up. And honestly, there are the two numbers on your policy that matter more than anything else. You'll usually see them written like this: 1 million per occurrence, 2 million aggregate. Sounds simple, but most people don't actually know what that means. So let's break it down. The per occurrence limit is the maximum the insurance company will pay for any one claim. So if you have a $1 million per occurrence limit and there's a claim for $1.2 million, the policy is going to cap out at 1 million and you're on the hook for the rest. Now, the aggregate is the total amount the policy will pay over the course of the year. So using the same example, let's say you have a $2 million aggregate. If you have two separate $1 million claims in the same year, your policy is now maxed out. There's nothing left for any additional claims until the policy resets. And here's where I want to give you a little bit of perspective from my world. In my experience, I have seen $1 million claims. They're rare, but they happen. But I've never seen a business have multiple $1 million claims in the same year. So when I'm thinking about coverage for a client, I'm usually more focused on making sure that per occurrence limit is strong enough to handle a worst case scenario. Because one bad claim is a lot more common than multiple catastrophic ones in a short window. And this is where people make a big mistake. They focus on getting the cheapest policy instead of asking, if something goes wrong, is this actually enough? Because the limits you choose are what determine whether you survive a claim or whether it becomes a serious financial problem. But even if you have the right limits, not every situation is going to fall neatly into a liability claim. And that's where a smaller piece of the policy, something called medical payments, can come into play. So let's talk about that part of the policy. It's small, but it can cause some confusion. And it's called medical payments coverage. Most policies have this built in. Usually the limit is somewhere between $5,000 and $15,000. And the key thing to understand here is that it is no fault coverage, which means the insurance company can pay out medical expenses without having to determine who is at fault. So, going back to our earlier example, someone slips and falls at your location. Instead of immediately turning into a lawsuit, medical payments can step in and cover their out of pocket expenses quickly. It's basically a way to resolve smaller incidents before they turn into bigger problems. But here's where people get tripped up. This coverage is very limited in who it applies to. It's not going to cover your employees. That's workers' compensation insurance. And it's usually not going to cover people who are on your premise regularly. So if you run something like a group home or a daycare or a volunteer based organization, this is where things get tricky. So let me give you a real example. Let's say you run a group home. If a resident pushes an employee down the stairs, that employee is not covered under medical payments. That should fall under workers' compensation insurance. If a resident falls down the stairs, they're also typically not covered under medical payments because they live there and are considered a regular occupant. So now you're in a situation where neither of those scenarios are picked up by MedPay. And the only way that coverage is going to come into play is general liability insurance, which is only triggered if the organization is found to be negligent. So, this is the key distinction. Medical payments is designed for quick, no fault situations with third parties who are not regularly on your premises. General liability, on the other hand, is what responds when there's actual negligence involved. And if you don't understand that difference, it's very easy to assume something is covered when it's not. Which brings us to a really important question. When does general liability actually kick in? Now, this is the piece that ties everything together because a lot of people assume that if something bad happens, their general liability policy is just automatically going to respond. But that's not how it works. General liability is built around one core idea: negligence. In simple terms, that means the insurance company is asking one question: were you responsible for what happened? And is somebody claiming that you did something wrong and you were negligent? If the answer is yes, then the policy is designed to step in and pay for a lawyer and a settlement. If the answer is no, then there may not be any coverage at all. And this is where it connects back to what we were just talking about with medical payments. Medical payments can handle smaller situations without figuring out fault. But once you move into a larger claim, something that involves significant injury or property damage, general liability is going to look at whether your business was actually negligent and caused the problem. So let's go back to that group home example. If someone gets hurt and it's determined that there was no negligence, nothing was done wrong, then general liability may not respond, and you may not want it to. But if it's determined that there was a failure in supervision or some kind of preventable issue, now you're in a situation where general liability can step in and cover that claim. And this is why understanding your coverage is so important, because it's not just about whether something bad happens, it's about whether that situation fits the conditions of the policy. And once you understand that, the next thing you have to look at is where the policy draws the line, because there are very specific situations where general liability will not cover you no matter what. And this is where a lot of people get caught off guard. Now, this is where a lot of problems happen, because when I hear someone say, I thought I was covered, it almost always comes back to an exclusion in the policy. There are a few big ones you need to understand. The first is the professional services exclusion. This one comes down to a simple question: did you cause the damage directly, or did it happen because you failed to do your job correctly? Because general liability is built to cover direct damage, not mistakes in professional judgment. So let's look at a couple of examples. If you run a daycare and a child gets injured because they wandered off into the street and got hit by a car, you didn't cause direct injury. That's probably not going to be considered a general liability claim. That's going to be viewed as a failure in supervision, which falls under professional liability. This same principle can apply for a contractor. If you install something and it physically breaks and causes damage, that can fall under general liability. But if the issue is a design flaw, something was laid out incorrectly, and that leads to a problem, that's typically going to fall under professional liability, not general liability. So that's the first major gap. The second is abuse and molestation. This is a standard exclusion on most general liability policies, especially in the human service environments. And it's not something that's partially covered. It's typically excluded entirely unless you specifically buy that coverage back. So if you're in an industry where that exposure exists, this is something you absolutely have to address. The third one is what contractors run into all the time, and that's the your work and care, custody, and control exclusions. And the easiest way to think about it is this: the thing you're working on is usually not covered. So let's say you're working on a boiler and something goes wrong and that boiler is damaged. The insurance company can say that piece of equipment was in your care, custody, and control. So we're not paying for that boiler itself. However, if that boiler explodes and cause damage to the surrounding building, that resulting damage may be covered. So, general liability often covers the damage around your work, but not the work itself. And once you understand these exclusions, you start to see that this policy is not nearly as broad as most people think, which leads to another important point. Insurance companies are constantly shaping these policies around what they're willing to cover, and that can create limitations that aren't always obvious at first glance. Here are some things that a lot of people don't realize. Even within a general liability insurance policy, insurance companies are constantly adjusting what they're willing to cover. And they usually do this by placing specific limitations on the riskiest parts of your business. So while the policy might look standard on the surface, the details can be very different depending on who you're working with. For example, if an insurance company doesn't like a certain product you sell, they might exclude it entirely. If they're uncomfortable with where you operate, they might exclude that location. And if they don't like the type of work you're doing out in the field, they might say something like, we'll cover slips and falls at your office, but we're not covering your operations out in the field. And this is where things can get dangerous because if you're not reading those details carefully, you can end up with a policy that technically exists, but doesn't actually cover most parts of your business or the ones that matter the most. This is why it's so important to review your policy with someone who understands your industry because insurance companies are always trying to control their risk. And that means your coverage is often shaped around what they're most concerned about. And if you don't catch those limitations up front, you're going to find out about them at the worst possible time. Now, the last piece of this, and something that ties everything together, is how these policies are actually priced. Because once you understand what's covered, what's excluded, and where the limitations are, the next question is, how do insurance companies decide what you pay? So here's the last piece, and something a lot of people are curious about is how insurance companies actually decide what you pay for general liability insurance because it's not random and it's not just based on how risky you feel. It comes down to how they measure the size of your operation. And the way they do that depends on your industry. For contractors, it's usually based on payroll because payroll is a good indicator of how much work you're doing. More employees, more jobs, more exposure. If you're in retail, it's often based on sales. More sales means more customers, more transactions, and more opportunities for something to go wrong. And if you're running something like a daycare or a group home, it might be based on square footage because that helps them estimate how many people are in your space and how likely it is that someone could get hurt. Now, here's the important part: every insurance company looks at this a little bit differently. So, two policies that look very similar on the surface can be priced very differently depending on how that carrier evaluates your business. And if you're not paying attention to what they're using as a rating factor, it's easy to end up with pricing that doesn't really make sense. So, when you step back and look at everything we've talked about, what's covered, how much is covered, what's excluded, and how the policy is structured, you start to see that general liability insurance isn't just one simple product. It's a set of very specific rules that determine when you're protected and when you're not. And once you understand that, the next step is figuring out how to actually review your policy the right way so you don't have gaps you didn't even know existed. Because understanding general liability is one thing, but actually buying the right policy is a completely different challenge. And that's where most businesses end up either overpaying, underinsured, or stuck with a policy that doesn't actually fit what they do. So if you want to see exactly how to approach this the right way, especially if you're operating here in Maryland, I've put together a video that walks through how to actually buy general liability insurance step by step, what to look for, and how to avoid the most common mistakes. So click right here, and I'll walk you through exactly how to do it.